I'm going to take you to the charts to show you guys an example of a low risk trading setup that I took this week. It's going to absolutely blow your mind. And by the end of this video, FOMO should be absolutely gone. Let's go. You guys are gonna love this, so make sure you watch the whole video to the end, because if you don't, then you're just not serious. You're not serious about trading. You're not serious about no trading anything. Before we go through all of this, I'm actually gonna take you through a diagram version of what low risk trading is. I literally forgot to do this in the first part, so I'm gonna do it right now. You guys absolutely love the low risk trading video. You guys actually took it to the moon. So honestly, I'm just grateful that that video was able to bless you guys. So on my screen right now, I've literally got a diagram format of what a low risk trading is. I'm gonna quickly break this down for you before I show you that example. So what I've got on my screen is that price has made a high, we've made a lower low, we've made a lower high. And in these areas here, we have our up close candles. So I've just colored these in blue, basically. These are our up close candles. We've got one up close candle and we've got a second up close candle right here. And so, ultimately, people love to get in from the very highs. One of my aims is always to get in from the high as well. But I also see other entries too. But one of the aims is to get in from the high. And if you don't manage to get this entry from nearabouts this high, or if you miss this entry, or if this is not your even type of trading style, trying to catch it from the high or the low, then it's always good to wait for the low risk entry. If you entered from this very high, it is high risk. It's a very high risk entry. Why? Because price could continue to push up. There's no signs that price wants to reverse. When price produces this up close candle, what really validates the up close candle is if it breaks market structure, if it breaks structure. So as you can see here, if it broke this low over here, which is what it did, then that means this up close candle is valid. But when price returns to this up close candle for the very first time, because you've seen it so many times, let's just be real, you've seen it so many times. I saw it this week as well. So we violated the lows, for example, and in my case, in my scenario, it was violating the highs. So just imagine the opposite. So in this case, we violate the lows, and then you would be expecting this up close candle to hold because it violated the lows. But then it instantly goes and violates the high. So literally, it will just come up from this low, boom, violate the high. And then you're just left wondering, like, what on earth is going on? Is this up close candle valid? Is it not valid? What's going on? Am I wrong? Am I right? And all price did was just expand beyond the range and just run out liquidity on both sides. This is why sometimes it's important to wait for the low risk trade. And guys, if that's happened to you before, drop it in the comments, where you was like so confident the price was meant to drop because it was meant to be a lower high in this scenario, or a higher low if you're looking to buy, and it just comes and takes you out. So it's done that before. And so this is why it's, like I said, it's so vitally important to know where that low risk trade is. And when I say low risk trade, I know I mentioned this in the very first video, I'm not referring to no low return trading. This has nothing to do with the return itself. Nothing to do with that. It's more so to do with being very confident placing trades, very confident taking trades, and knowing that, yeah, I'm in the right trade, even though I've missed the first expansion, the first push, the first move, it doesn't really matter. Because let's be real, back in those retail days, when we started seeing price move in our favor when we weren't in that trade, what would we do? We would be panicking, be stressing, trying to force it, trying to force entries, enter at the broker's price. So technically, let's just say you was thinking price is going to drop from here. When you don't enter and you see price trading away, you start panicking, you start losing it. I should have been in this trade. Okay, let me jump in now so I don't miss the move and all this stuff. You start going crazy. But listen, that's all panicking, that's FOMO, that's all of that. You want to, lowest trading gets rid of all of that. So now when you see price trading away, don't panic. Stay comfortable. It's all good. Do you understand? My mouse is acting up right now, just let you know, because it's so annoying. But anywho, what I'm going to do, I'm going to change to my trackpad. It's just so much easier. Let's change to that. Yeah, there we go. When price trades up into this up close candle, it's still high risk for the very reasons I just explained. There's nothing wrong with taking trades here, right? I take trades here multiple times, all the time. It's just that it's a high risk trade. And when I say that, I mean it can still run out the high. But the moment you see price respond off of this up close candle and then violate this low right here, so I'm going to bring up this real quick, and we violate another low, then this becomes a entry when it returns back up into here. So you want to see it violating these lows, because it then means that these highs are being protected and your eyes should be looking to the downside, looking for entry near about the up close candle where they're mitigating. Ideally, okay, for the safest place, I'm not saying this is the only place, but the safest place, you want to put your stop losses above the up close candles, and then you'll be looking to take it low, right? You should be either targeting this low, or if there's something beneath this area here, this is what you want to target. Whether it's, a liquidity a bit lower, whether it's some kind of institutional candle or anything like that, that's something that you can target too. And I know some of you guys again are saying, this is a bit long. We've missed the move. I don't take entries off of the 4-hour time frame, the 15-minute time frame, the 1-hour time frame. I don't do any of that stuff. I take entries off of the 1-minute time frame. So these pushes, these expansions lower and retracements, they happen in good time, in quick time. And also, just let you know, if it doesn't pull back, so be it. It's gone. It's gone. Don't be stressing. Don't be crying. How about you come back the next day and you look about entering another low risk trade? And by the way, I'm not saying you can't enter along the way, and as long as you know that you're within that first push, you know when to exit your trade, liquidity is here, you know when to take partials, it's all good, but you need to be able to manage that trade well. So now what I'm going to do is I'm going to show you guys a trade that I took within a week on GBPUSD. This trade was absolutely phenomenal, played out to the T, was a beautiful, beautiful low risk setup, and so it was full of confidence. So guys, let's get straight into that. So right here, this is GBPUSD. Now, some of you guys are probably already seeing the low risk kind of setup. I'm going to put on my annotations now so you all can see what I'm seeing. And if you did see this, let me know in the comments as well. You know, I want to know whether this low risk trading stuff is really helping you guys. And if it is going to be helping you guys, I'll continue to show you some more of this low risk trading. And before we even move anywhere, guys, if you're getting value from this video, make sure you smash that thumbs up button. Let's try and go for 400 likes on this video. So here is my setup. This here was my setup. This is just an example of low risk trading. I wasn't in higher than this, but just for this video, I also wanted to give you guys the entry I took for the low risk on this whole setup as well. You can see here we're making higher highs and higher lows. You're seeing these higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And as you can see, we're pushing higher. We are pushing higher until we get to this very point where we produce equal highs. You guys know the story. You guys know what's going on. Whenever we get those equal highs, they're trying to entice people to sell early. And there are people out there who want to do this. And if I zoom in here, once they get their equal highs and they get a rejection, they normally wait for that confirmation lower. This candlestick here, this one here, the moment this candlestick closes, that's kind of like a confirmation to sell. That's one confirmation to sell. But look, those you sold when they got down here violated. They run out that liquidity to the top. There's the money up here. The people looking to sell would put their stop loss up here. People looking to buy above here, they would have been dragged in, tapped into the trade, and then violated, stop loss taken out. This was the very high risk trade. This is the very high. Like I said, you don't want to be selling at equal highs. That's high risk. If you know what you're doing at this level, yes, you can be selling. But if you don't know, it's still high risk. It's still high risk. Then we break structure to the downside. Every single one of these lows were taken out. Okay, all of these lows until we got here and we produce equal lows. So in other words, what's happened? We've broken structure to the downside. You're seeing these higher highs, high lows, higher highs, high lows. You can see we're breaking structure to the downside. Then we retrace up to the up close candle. This is the very first time. The reason this was valid was because structure was broken. And then we respond off of it again with another break in structure. Price is moving in your direction. There should be no reason for you to be experiencing FOMO, or to be getting hesitant, or to, you know, any of that stuff. There's no reason for you because price is moving how you want it to move. And all you do then is wait patiently for price to return back up into this up close candle. And then you'll be looking to catch an entry within this up close candle over here. This is where you're looking to catch an entry within this up close candle. This is exactly what I did, and we were running the mentorship through this. I believe I was on a 1 minute time frame at the time, and price had pushed. These two candles had gone, and I sent it out to the team, and I was just explaining to them, look, this is the low risk setup. This is the low risk setup. And then we went through some other exercises regarding where to take TP and everything else. So once you're in that trade, you want to be targeting something. Price was making lower lows and lower highs, lower lows, lower highs, right? Same low, same high, lower low, lower high, lower low, all that stuff, right? Price is making lower lows and lower highs. And so this is the turnaround point. This was the point at which they turned around and started making higher highs and higher lows. And so this is going to be your target. So specifically for us, we were targeting a little bit lower than this. We were targeting this down close candle, specifically in here. Right, this was the area we were targeting here. Just beneath this area, price dropped another, this is double check, price dropped another, how many pips in total? Roughly about another 8 pips. Well, price dropped lower than that. That was just my target really, but price dropped lower than that. Price dropped all the way, yeah, roughly about 12 pips. And it's just so beautiful. Do you know why? Because whenever you get like a low of that, you have to think about where are people going to be placing their stop loss beneath this low. And it's going to be roughly within 10 to 20, 10 to 30 pips. And so price dropped 12 pips deep before obviously reversing higher. But as you can see, the low risk trade was the trade that took us straight to the money. So you know there's money down here. Let me quickly just mark this up. There's going to be P's down here. Let's get that money on. There's going to be P's down here. Another reason why he was confident that price was going to drop was because there was also like a retail trend line. And you guys know what happened. There's a liquidity pool here. And if you guys haven't watched my liquidity series on how to identify liquidity, how to trade it, definitely watch that video after this one. That one will literally blow your mind. So, and then just to break this down for you guys, just so you guys knew what we were looking at. So we were looking at the down close candle beneath liquidity, right? And so that was the target. So if they're going to be in drawdown in the down close candle, this is the whole thing from the top to bottom, but you can refine it as well. We had a down close candle from this high to this low as well. If they're in drawdown in that candlestick there, then you want to target there as well. If that is sitting beneath liquidity, that's going to be a nice juicy target point. So first we had the liquidity pool that we had to violate the whole thing, right? We had to take out all the money because at every single touch of these trend lines, you know, people are going to be placing stop losses either beneath the trend line or beneath the previous low. So you know there's going to be tons of money resting beneath here. Whenever you see something going up in a trend line format, just know there's money beneath here, known as a liquidity pool. Also, the very low has money because it's a low. Above, beneath every low, there's liquidity. And so you're going to be targeting there too. So we had one drawn price, which is the liquidity pool, another drawn price, which is the actual low, and then beneath that where they were in drawdown, which is the down close candle. This is exactly where I was targeting, and they got there to the T, had a beautiful move, and that was posted on Instagram at the time as well. So that was an absolutely phenomenal trade. But what I wanted you guys to see is that when you catch a low risk setup, you should be Gucci, you should be comfortable, and it's normally the low risk setup that literally smashes through all kinds of liquidity. Look, there should be no more FOMO. This strategy here gets rid of FOMO. If you're still FOMOing after this, then I can't help you. I can't, okay? Anyway, family, like I said, watch this series right now if you're very serious, if you want to know more about liquidity. Other than that, guys, have a blessed day and peace.